Tesla stock is down 4% today, even though Dan Ives had this to say about Tesla. He says, quote, "We believe the stock is way overshooting on the negative front as the demand story for Tesla is more in stabilization mode heading to the rest of 2024. Price cuts are moderating, battery cost / production is showing strong cost efficiencies, and a sub $30,000 vehicle is on the roadmap for the next year." He added, "We believe the risk to reward is extremely compelling at these levels with the AI story and full self-driving, making major strides at Tesla, and in our opinion represents a valuation that could exceed $1 trillion as this next chapter of the Tesla growth story plays out in the field." Tesla's current market cap is about $533 billion just for Tesla to get back to a $1 trillion valuation. That would be around $340 per share, or a 100% gain from here. Now, why is Tesla down 4% today, you may ask? Look no further than Wells Fargo. What a convenient time to downgrade Tesla stock. They say Tesla is a growth company with no growth. Apparently, they forgot that in 2023, Tesla grew top-line revenue by 18.8%, which indeed was faster revenue growth than Microsoft and Apple combined in 2023. Tesla's top-line revenue growth in 2023 was greater by about 2x than the entire S&P 500. Wells Fargo lowered the rating from equal weight to underweight. In addition, Wells Fargo has significantly slashed its price target on the stock, setting a new price target of $125 per share, down from $200 per share. The firm cites concerns over Tesla's recent price cuts and potential delivery slowdowns, which it believes will drive further losses for the electric vehicle maker. This Wells Fargo analyst, Colin Langan, he actually believes a leveling off of sales will happen in 2024 and then an outright drop in sales in 2025, which is quite the contrary to popular belief right now. Popular belief right now is 2024 is going to be slightly a muted year, maybe 10% growth for Tesla deliveries, and then 2025 should ramp back up again. And apparently Wells Fargo does not believe that is the case. He says Tesla is a growth company with no growth. While using the sales volume rose, unit sales volume rose just 3% in the second half of last year from the first half. Prices, however, were reduced by 5%. Langan also says Tesla stock performance compares to others in the Bloomberg Magnificent 7 Price Return Index screens poorly relative to its peers. Wells Fargo lowered its 2024 profit estimate to $2 per share from $2.40 per share. The average expectation across Wall Street is $3.03 a share. Now, I will tell you, it's not necessarily bullish for a stock to see downgrades and EPS downgrades, right? Price target reductions. But it does lower the bar a lot as far as expectations. So if the expectation is $2 of EPS and Tesla can beat that, then you're going to see a lot more people now that are wrong on Tesla, whereas if the estimates were higher, maybe not. So in other words, coming on Tesla's delivery number days or on Tesla earnings days throughout 2024, it's going to be a little bit easier to beat the estimates, and that should send Tesla stock higher. Hopefully by now you realize how Wall Street operates. Wall Street operates in the sense of if a stock's going higher, it's beautiful. The business is going to do very well. There's no regard for any downside risk. Same is true to the opposite direction. When a stock is falling, whether it's justified or not, in the case of Tesla, I don't think this move lower has been necessarily justified, then people just get super bearish because that's what's popular and that's what brings in clients and that's what keeps clients. When you got to kind of read through the lines a little bit. Like, is now really the time to be downgrading Tesla when it's one of the worst performing, if not the worst performing stock in the S&P 500, down over 32% year to date? Is now the time to really downgrade the stock, or was the time to downgrade the stock when the stock was trading at $265 per share back to start 2024? I would argue, a lot of bad news is priced in. To lower your price target even further down to $125 per share, I think is pricing in a really bad scenario for Tesla, and I think you're pricing in, well, a far worse scenario than is actually going to be realized. As I have talked about before, there is no pricing in of a faster than expected new model coming, a $25,000 vehicle or roughly in that range. There's no pricing in of any kind of halo effect or the Model 3, the refreshed Model 3 being successful in the United States. There's obviously no FSD or Optimus priced into Tesla stock, or even the energy business of Tesla performing better than expected. There's no pricing in of FSD entering the European or Chinese market. And there's also no pricing in of an Elon comp package or the Tesla team becoming more constructive and more bullish on AI and on the entire economy. With that being said, fan favorite Nvidia is down about 1.6% today. The broader NASDAQ is down about 0.5%. That's certainly not helping Tesla stock all too much today, albeit the Russell is actually in the green. So it's kind of weird how Tesla is grouped these days. Some days it's grouped as if it is a big tech stock. Other days it's grouped as an interest rate sensitive stock and performs in line with the Russell 2000. Today is definitely one of those days where Tesla is grouped as another just big tech name with bad AI prospects. It's not really seeing a lot of the AI love and is falling like your big tech names today. We also did not really get any news today. There was one event that happened, which was a bond auction. We'll talk about that here in just a moment. But I do think part of the decline today, especially in Nvidia and others big tech names, is the realization that CPI, while it didn't really rise last month, and we got CPI yesterday, it's not progress on inflation. And odds are, if we don't see progress or we don't see the economy slowing down, we're not going to get any rate cuts from the Fed. And what I've heard a lot of people talking about now, if we don't get rate cuts in that July Fed meeting, we're probably not going to get any at least until after the election, because the Fed wants to keep their independence and they don't want to look as if they are politically motivated by either side of the political body or atmosphere in the US. And that makes a lot of sense to me as well. Unless there is a big reason they would need to cut right before the election, they're probably not going to. So I think it's really coming down to the wire here, and I think the markets are going to have a lot of repricing to do if we don't indeed get rate cuts. We do have data coming out tomorrow morning that will be very important, that could help dictate if the Fed gives us rate cuts, when the Fed gives us rate cuts, and we'll go over that more in depth in the next video coming out at 8 p.m. tonight, because I think it can give the markets quite a large move. Now, at one point today, the NASDAQ was down about 1%. You're down less than half of 1% right now. So the NASDAQ has about 50% retraced from the low of the day today. And a lot of this came down to the 30-year bond auction. We had this bond auction at 1 p.m. today. The previous auction came in at 4.36%. Today's auction came in at 4.33%. So 3 basis points lower. Now, let me tell you why this is good news. When there's a lot of demand to buy bonds, bond prices go higher, bond yields go lower. So there was a lot of demand for this 30-year bond auction today. That's especially good considering yesterday's CPI came in hotter than expected. That did also have a positive effect on 10-year Treasury yields today. Even though they're still up today, they were up a lot more before this bond auction. 10-year Treasury yields currently sitting at 4.19%, up about 3.5 basis points on the day today. If you take a look at TLT, this was the bond auction candle, and you can see we were hanging out here quite a bit lower before then. 10-year Treasury yields were down about 6, or up about 5.5, 6 basis points or so. So this definitely was a little bit of good news for the bond market. Elon Musk visited Giga Berlin today, as the factory has recently just got power again and has started operations. He was expected at a team huddle with employees at the plant in the Grünheide municipality. Employee council chief Michaela Schmidt said Elon shouted "Deutschland rocks" or "Germany rocks" to the press. Apparently, the Porsche CEO says, quote, "We're overwhelmed by orders coming in for the electric Macan, which we're confident it's going to be a hit." Bloom added that in the 4 weeks since the new Macan made its debut, Porsche has received more than 10,000 orders for the car, which again is kind of one of those things where Wall Street, they're so negative on EVs, yet a company like Porsche, which makes mostly gas vehicles as of right now, they're saying, wow, we see all of this big demand for this electric Porsche. And let's be honest, the Tesla guys, they're probably not the ones that are going out and buying this Porsche or looking to buy this Porsche, there are probably other EV owners, the smaller group that are not Tesla owners, and other gas vehicle owners currently. So I would say this is good news as well to kind of change the thought process on how EVs are evolving with consumers. A lot of people have the expectation that consumers are switching to hybrids, right? Which I don't really see the trend there. We'll see if it does happen over the next, couple of months and years, but I don't think that's where we're going. You're either buying a gas vehicle or you're buying an EV vehicle. I mean, that's personally the way that I've always seen it. And that's how I've seen other people operate as well. That they're not like, oh, I want a hybrid. That just don't make any sense to me. Look at the front page of CNBC today. EV euphoria is dead. Automakers are scaling back or delaying their electric vehicle plans. That just shows you how pessimistic the markets are right now on EVs. Some companies deserve it for good reason. Lucid, Fisker, all these other companies that were way overhyped, way under-delivered on their promises. Can you group all of them in that category? Really, though? Can you? I don't think so. And personally, as a long-term investor, it's important when you buy a stock, and I think when the sentiment gets this bearish, you almost have to buy the stock if you're still bullish on the company. Really, all of this negative sentiment around Tesla and EVs, I think it's just outright out of control at this point. People just can't help themselves. Momentum is the most powerful factor in the markets in the short term, to the upside or to the downside. And that's where you really change expectations for better or for worse. Typically, again, the lower the expectations, as long as the company's not actually following through with those bad expectations and seeing negative overall trends, right? It's typically a good time to be buying that stock. When expectations are super high, there's a lot that can go wrong and you can under-deliver for investors, and that's potentially a problem. Specifically why I'm not that bullish right now on your Mag 6 stocks or the S&P 500 or NASDAQ broadly. I did write this post on the X account last night. If you guys are not following this account over there, make sure you guys go ahead and give that a follow. It's Michael Tyler. Same picture as the YouTube as well. I want to share this post because I think it'll resonate with a lot of you guys. I said, I just want to be clear, I'm not super bearish on general markets. I think most of the markets are fairly valued, not cheap, but fair. I'm bearish on SPY and QQQ plus Mag 7. Why? I'm glad you asked. Expectations are the most bullish I've ever seen. I mean, to justify this, you need Fed rate cuts, strong economy, inflation to continue to fall, and earnings to rise about 11% this year and 10 to 12% next year. Just the Fed raising rates this aggressively would say historically there's about an 80% chance of a recession. So statistically, I have to be bearish/conservative. Too many things need to go right. Be careful. I'm bullish on Tesla for many reasons, but one important one. It's down 30% year to date and priced as if there are two asteroids on a crash course for Tesla's mega factory. I mean, let me know what you think about that. If you're bullish, if you're bearish, if you're neutral, if you think it's going up or you think Tesla stock's going down. But I think people are way too bearish on Tesla right now. In other news, Polestar has released the new US pricing for the Polestar 3 EV. Polestar 3 long range with all-wheel drive will start at $73,400, $10,000 lower than they originally announced, and production starts in a couple of months. Tesla has released a new video turning the lights back on at Giga Berlin. Very interesting video here. I'll go ahead and share it on the X account just if you want to watch it, but it's literally that, them turning the lights back on after the factory was shut down for a little over a week. Tesla has now leased another 144,000 square feet of space in Kyle, Texas, near Giga, Texas, giving the automaker another 1 million square feet across buildings 1, 2, 3, and 5. Doug DeMiro on Cybertruck Haters says, I find it funny all these Ford Raptor people saying, oh, the Cybertruck can only tow this many pounds, this many minutes. And it's like, when's the last time you towed? You bought your truck because it's cool. This person is doing the same. You're just mad they upstaged you. We do have some earnings today and after hours. The bigger day for earnings will be tomorrow. You have UiPath, Centennial One, Lennar, ESS, Vroom, Valco Energy, FTC Solar, Anika, and Coin that will be reporting earnings tomorrow. Pre-market, Dollar General, Dick's Sporting Goods, Futu, Canadian Solar, Build-A-Bear Workshop, Autolus, and some other companies. But really, your big guys tomorrow and after hours will be Adobe, Blink, Ulta Beauty, and PagerDuty, among other names. And then Friday, just some random names that will be reporting earnings. Adobe could be a little bit more important for the AI trade, though, so definitely want to be watching that one for the broader markets. Here on the day today, it appears as if Tesla Model Y inventory numbers are continuing to fall to the lowest point they have been at since about mid-January, so that's fantastic news there. Inventory is starting to come down, now at about 5,900 vehicles. Model X, Model S, and Model 3 staying relatively unchanged every single day. Inventory for the Model S at about 1,100, about 1,200 in inventory for the Model 3, and about 2,100 in inventory for the Model X. Google Trends data showing positive signs for specifically the Cybertruck, recently going from 29 now to 31, the Model Y picking up a little bit from 32 to 33, and the Model 3 staying at about 36. You're really seeing a lot of organic search trend activity for the Cybertruck. Again, I want to be clear, I don't think these are Tesla investors that are talking about searching about the Cybertruck at this point. That was these spikes back here that was mostly, I would argue, Tesla investors. This recent rise that you have seen, this slow and steady uptrend, I think is prospective buyers of the Cybertruck that are maybe not already Tesla owners, or at the very least, you know, it's a good sign that some of the auto shows and maybe advertising is starting to be effective that Tesla has been doing recently. On that note, Tesla is currently running about 3,000 different ads with Google. Lots of these are short form ads, some ads in South Korea and Japan and Hong Kong. And Tesla really trying to advertise the affordable starting prices now for the Model Y and the Model 3 being in the 30s. $37,000 range, which is actually about what, $4,000 to $6,000 cheaper than the average new vehicle purchased in the US. The percent of stocks above their 50-day moving average today is now at 57.5%, up about 2.43% today. You're seeing this solid uptrend from the lows that we hit at about 43% of stocks above their 50-day moving average in early February, but still, you're not in a very bullish market at all in the grand scope of things. You had 86% of stocks above their 50-day moving average back here towards late December of 2023. Ironically, the same time Tesla peaked out at about $265 per share. On StockTwits, sentiment is very negative today for Tesla, which is likely no surprise given Tesla is down about 4%. Sentiment is at 36 today, whereas yesterday you were actually bullish with a sentiment of 70, which was almost extremely bullish yesterday. So there's always something, it seems like, to drive down the sentiment in Tesla, to drive Tesla stock lower. Message volume today is at 59, so it's on the high side. Yesterday, message volume was normal at 49. So more people talking about Tesla stock today, and the participation ratio is at 56, categorized as at high. So there is quite a few different accounts today talking about Tesla stock as well. Now, what's actually surprising, very surprising about Tesla being down so much today is the option activity from hedge funds and institutions. You have seen 868 orders today totaling $2.44 billion with a positive order value of 71%. Now, a positive order value can be buying calls or selling puts. Negative order value, which is about 29% of $2.44 billion today, that would be buying puts or selling calls. So the vast majority of individuals today are buying calls or selling puts. You know what's actually fascinating about that is when you take a look at the volume today, you're getting a tale of two different stories today with retail investors and hedge funds and institutions as it looks. You have call volume at 36.5%, the lowest number we've seen in a very long time. Put volume at 63.5%. So almost 2 times as many puts being bought today than calls. You could make an argument that there could be a lot of selling of puts. Maybe that's why the volume is so high, but the positive order value is so high. Again, selling puts is a bullish trading style. Maybe that could explain some of it, but there would have to be a lot of selling puts. In that case, Tesla stock is probably getting close to a bottom here. Or you may just outright see retail investors being bearish today, buying puts, and institutional investors going out and buying calls. I mean, that's precisely what you're seeing here. Take a look at this trade, a May 17th 150 call worth $3.68 million. $58,000 call trade there, $331,000 call trade there. Lots of puts though, so I would definitely say there is some selling of puts happening today. Definitely can't rule that out. Some of these trades are $20 to $100 million a piece, like this January 21st $276 put. It looks like this was likely sold with a trade totaling $102 million. That's a very large order. What's also surprising today, following the recent spike in shorting activity with Tesla, with the short interest going from 3.2 to about 3.5% over the past couple of days, the cost to borrow fees are back to about 1.5%, which actually suggests there's not too much shorting activity taking place today. Tesla stock on a technical basis, well, fell under this support line right here that we've been talking about for a while. Next stop is likely to be about 165. That's only about $5 lower than where we currently are, and that's probably going to be tested. You can see the MACD, this yellow line is under the blue line, so that looks pretty bearish. The RSI is almost oversold again. You've been on the oversold side for a while. Tesla stock really hasn't done much of anything. It's trended down for a while after this bear flag pattern was recognized, and you got that large gap down. This was on March 4th. It's been pretty much straight down for months now. So the RSI has really only got back to neutral right before that gap down. This was around March 1st. So you've been oversold for a while, but anything under 30 and you're like really oversold, really pessimistic. And yeah, we're almost there again. Tesla's RSI at 31.72. So yeah, I think it's fair to say the last couple of months have, well, been a little nerve-wracking for a lot of people, especially if you're all in on Tesla. You've seen a lot of your portfolio value get decimated, and unfortunately that's part of the game when you're a long-term investor. If you don't have these fear opportunities, then you never get good buying opportunities, because you want to buy when people are fearful. And I don't know how much more fear there really could be out there, unless Tesla really does come through with some bad numbers, continues to cut prices. I think a lot of the bad news, if not all the bad news, is already priced into Tesla. Does that mean Tesla's instantly going to bounce and start doing better? Probably not. I mean, you got to look at technicals. You got to look at what's going on in the markets. Unfortunately, when you look at the triple Qs, you look at the S&P, I mean, you're destined for a gap down at some point. You're destined to break this technical uptrend. When that happens, does Tesla stock start to outperform, or does it really start to underperform and get crushed even more? I think that's a big question, and I do think right now you want to have a lot of dry powder on the sidelines to be able to do some buying if Tesla stock or other stocks, do start to fall from here. I think time is your friend, and ultimately time will tell, but I do think stocks are due for quite a large correction here. Let's be honest, the markets are priced for damn near perfection. Let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day. By the way, if you want to come trade with us live in real time, check out that link down below in the description of this video. Major events coming out tomorrow morning. We'll talk about that in the video coming out at 8 p.m. tonight. I will see you guys there. Follow the X account if you have not already. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.